Okay, hello everyone, welcome back. This is Vijay from the Black Box. So yesterday I have showed you how you can trade the black box on cryptos on the daily and on the weekly and on the monthly time frames. So you can check the video out. The video is titled trading crypto trading strategy. Okay, crypto trading strategy and trading Bitcoin on the weekly and on the monthly time frames. That is the title of the video, so you can watch it. This is the next part where we trade the Bitcoin on the monthly time frame. On the daily time frames. I'm sorry. As you can see, this is the beginning of the where Bitcoin started. This is the start. Okay, this is the start where we have the chart. We have the chart right here, right on August 2017, right up until to where we are now, 2024. So can you see any consolidation around here? Is there any consolidation around here? We have one right there, right? I told you, I already told you in the previous videos, if you have watched it, that for any consolidation to be valid as the black box, what it has to be is it has to be 3 consecutive candles in a row, right? So this is the right one because that is the upper range, this is the lower range of the market, and the market traded between the two. So you can mark this thing. How do you mark it? You mark it just like this one. Let's turn this to black a little bit up, right? So this is it, right? This is it. You mark this one and you wait for the breakout, right? You wait for the breakout. The direction of the breakout was to where? It was to the downside, right? So the downside, as it is a daily chart, so as you can see, the market broke to the downside. You measure your TP from up there to down here. Your TP is right there. Nailed it exactly. Your TP is nailed. That is amazing. 70% off. You trailed your stops above your entry, below your entry. Now you are in profit. Now the market again retraced up. So what you gonna do now? You buy. When the market bursts up, you buy, right? You buy this thing, and the take profit will be the same. Okay, the take profit is this one. So you can see this candle filled it beautifully. This is a daily candle, so there is a lot of pips. We can measure this thing, the pip here to here to your TP, that is 167, a whopping 167 pips. That's huge. That's amazing. In a day you get 167 pips. That's amazing. And this setup gave you 2 entries, and both of them were successful because of thanks to the black box and the models that it offers, right? So as you can see, the TP is hit 70% off. You let the other run. Your stop loss is above your entry level. As you can see, it's supported and went up. Okay, so hopefully your stop loss is not hit, and you measure your TP. Your TP, as you can see, is right there, TP3. Okay, I already told you TP3 is the one that you need to get out, or at least trail your stops. Okay, trail your stops, and if the market continues, just trail it. If it continues, just trail it. Okay, because if you are in profit, the target is to maximize your profit. If you are in loss, the target is to minimize your loss, right? So that's how you make money. That's one setup right there. Let's come back here. What do we have here? We have nothing. Why? Because it is trending. As you can see, it is trending, so we don't want these kinds of things. We want 3 consecutive candles, 3 or more consecutive candles. What do we have here? We have something here. 1, we have 2, and we have 3. This is the range. This is the range the market traded. What you're gonna do is you include this candles body in that candles wick right there. That is how you connect it. So you are entering after these 3 candles are formed. So we don't care about this, we don't care about this, we don't care about this, okay? All you care is once it breaks out, we'll be entering. So it broke to the downside. As you can see, you measure your TP as always, the head. I'm sorry, that's not it. As you can see, this is the TP. You put it down here. Your TP is right exactly as that market is close, as that candle is close right there. That's beautiful, nailed it. And your other 30% will be, your other 30% will be right there. You get out right there. If the market continues, I already told you to trail your stops at least half. And if it continues, trail it half, trail, 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 and then it opened right here. So you trailed, it came down, you trail, you trail, you trail. Finally, it retraced back. So you are out of the trade right there. Maximum profit. That is a whopping 3,000, 2,000, 1,300 pips right there. From your entry to the market's reversal, that 1,300 pips. It's huge. That's huge right there. So amazing trade right there too. Do you see any consolidation around here? This one is trending. As you can see, it broke the high, and then we got a consolidation, but this thing broke it to the upper side. So this cannot be regarded as a consolidation. But if you insist, you just connect this thing just like this one, right? So you enter at the buy. When it breaks it, you enter, and then you trail your stops. As you can see, your TP is hit by this candle, and it made a block, and after that it went to your TP3, right? It went to your TP3. That is your TP3 right there. Right there, TP3. Even TP4 was hit. Okay. That was an amazing trade. What do we have here? Nothing. We have nothing. It is trending. What do we have here? Only 2 of them, so it is not great. It's not great because only two of them, so we want 3 candles. Right here, 2 candles, we want 3. There is no trade. There is no trade at all in this area. Not here. Not here. Maybe this thing can be just as like this, right? Because actually the range is this one and this one. So as you can see, when you connect it, the range is still valid because it is here to there, and 1, 2, 3, 4 candles right there. The 5th candle broke out. Measure your TP. Sorry, what is wrong with this thing? Up there to down here. That's it. At the market close, at the candles close right there, you get out. Your TP4, TP3 will be exactly TP3 and the TP4 hit, so you trail your stops, and that would have been a great trade right there. Do we have anything here? No, we don't have anything here. What about here? We have 1. We have, it is coming down, so this thing can be the range is this candle low and this candle high, so all you gotta do is it is trading sideways, so this can be regarded as a consolidation. It is more than 3 candles, so the thing is that it broke to the upside. You measure your TP. That is where you get out. The second candle got you out. 70% is off. You let the other 30% run. So you can see TP3 hit, but TP4 never hit. It took so much time after 4 days of trading, and it finally came back and got you out of the trade by hitting your stop loss because you are trading. So you will get out at TP3, right? Do we have something here? We got 1, we got 2, we got 3. When you see these kinds of things, all you gotta do is you gotta connect this one to the lower part, that second candle's low, and you don't connect that one because that is huge candle. When you see these kinds of wicks, you don't connect the black one, you connect the bodies, right? Or the lower wicks, or lower wick, the higher wick. So you can see another great trade right there, broke out to the upside. My goodness. This third TP hit your TP. This third candle, I'm sorry, this third candle hit your TP, and your TP3 will be right there at this candle's high, right there, okay? Right there you get out. You don't get out, you trail your stop, you trail your stop, you trail your stop could be down here, so market retraced, then went up. You trail your stop, you trail your stop, you trail your stop, then the market finally came back, got you out of the trade. Do you see any consolidation here? Nothing. There is nothing. 3 consecutive candles in a row. Do we have something here? Yes, we do have something here. All you gotta do is connect these lows, this candle's high, this candle's wick, this candle's low, and this one too. So the market broke to the upside, so we are buying because it broke to the upside. If it broke to the downside, then we will be selling. So you can see this candle filled it. When we measure the fib, TP2 is hit. TP3 never hit, it was TP2. So trailing your stop would be smart. That is a smart move. Do we have any consolidation here? Nope. Only 2. We need 3 of them. We need 3 here. 2, not 3. And there is something here that we need to consider. Right here, we can do this thing and connect this thing, okay, like this one. Why? We got 2 candles, right? We had 2 candles, that is a valid 2 candles consolidate sideways, right? The range is not broken. And the third candle traded down. That is what we want. It doubled. It doubled this thing and it came up, right? So that is where we enter. This is the third candle that broke this consolidation, right? Your TP also tells you the exact thing, right? I'm sorry, you delete this thing. But these kinds of things happen rarely, so as you can see, your TP tells you exactly your TP is 70% out. You let the other 30% run. As you can see, your second TP, I think, yes, second TP was hit, but when you trail your stop, this sort could get you out of the trade, so you will not reach that one because you are trailing your stops. This pullback will get you out of the trade, so you don't even care because you are in profit, right? What do we have? We have one, we have two, and we have the third one right here. Connect it like this one. The body is not the wicks. So what is happening here is we got two consolidations and 1 2, and the third candle, instead of going up, it came down. So if it comes down, this is third consolidation. Okay, three consolidations, three candles right there. So when it breaks to downside, you enter the sale, right? This is your TP. As you can see right there would be your 70% out. This is a daily time frame, so it is hundreds of pips. Okay, it's not simple. It's not a few pips. It's not 20 pips. It's not 15 pips. It is hundreds of pips, so it is a huge return. Okay, measure your TP, third TP. So you can see force. It got the force. You would trail your stops. I told you half the way. When it reaches here, half the way. When it reaches here, half the way. And then finally it rests, then it got you out of the trade. So you don't even care. You are in profit. You are in profit. What do we have here? Another consolidation. 3 consecutive candles in a row. How do you connect this? You connect this one, the lows, you connect the highs. Okay. It's as simple as this. It's simple. It's very simple. You don't need to do anything else. There is no analysis needed. As you can see, our TP is around here. So you can see TP has nailed it exactly at the point. Boom. And you are out. And you trade your stop, so you don't care if market comes back. Okay. What do we have here? We had 1 right here, we had 2, we had 3, we had 4, right? We had 4 consolidations around here, connecting like this one. Okay, bring it here. What happened here is interesting. The one we saw earlier are, most of them are the first model and the second model. Break and retest and real breakouts, okay? But here we got the third model that is single fake out, okay? But thanks to trailing your stops after the market has moved away, you trailed your stop halfway. This could not be catastrophic because 1, you are protecting your money, right? You are not losing money, any money. You will not lose any money. Second, there is another trade. Single fake out gives you a lot of pips when they play out. Okay, as you can see, after hitting your stop loss and you are in profit because it got up. As you can see, a TP was not hit right here because it is a fake out. Fake outs do not hit your TP, mostly so. As you can see, then what you're gonna do is your stop will be trailed up and you will be out because the market retraced and hit your stops. When it starts to break this thing, you sell exactly right there. You sell and you get out exactly as this candle's low or this candle's low right there. Okay, you get out there. 70% will be out. 30% will run because the market will continue, especially single fake outs or the third model of the black box has. It is amazing return. It shoots like a rocket. It will not look back. It will shoot. Okay, there is no break and retest. There is nothing. It will burst into its target, right? As you can see, TP3 after TP3 has been hit, it retraced back. So that is where most of the market is retraced, okay, after TP3. But if you want, you can let the other thing run. I mean, you can trail your stops down, and then finally it will get you out of the trade because of this pullback right there. Okay, so this could have been another great trade right there. The third model right in play. What do we have here? Another consolidation. 1 2 3. Isn't this beautiful? Isn't this beautiful? You just connect it like this one. Okay, actually it is upstairs because these wicks are not equal. So you are entering after this third candle is formed, right? So this is place, not up there. Okay, we are entering after these three candles are formed, not when this candle is still trading. No, no, no. We are entering after this candle finishes. So it broke. So we enter right there. It broke the downside. You measure your TP. That's why I always tell you to wait for three candles to finish there, to form. To wait for three candles to form right there. So you can see TP hit beautifully, and I think TP2 is also hit. So you can see TP2 is also hit. That's beautiful. It's amazing. And you trail your stops halfway, so you can see the market retraced. You don't care. You don't care because you are in profit. You are in profit. What do we have here? Another consolidation. 1, 2, 3, right? So all you gotta do is you gotta connect this thing just like this. I connected this because they are relatively equal. They are equal. As you can see, the third model in play again right here. You gotta do is you gotta measure this thing and put it up there. So you can see TP never hit, but you are in profit because you trailed your stop, right? Halfway through. And when it breaks to the downside, you enter a sell, right? So this is a break and retest right there. So in this case also the TP was not hit. It was too close. It was close, but you trailed your stop. So after this thing breaks out, you trailed your stop. So this candle could get you out of the trade, right? Because you trailed it too close. So we don't participate in this thing because there is nothing we can do. We have another consolidation right there, but this thing is so big. This consolidation is so big, but we can do it like this one. You connect the body and the wicks, measure the TP. So you can see TP hit beautifully. Where? Right there, exactly at that candle. Right there at that candle, right? Your stop is above your entry, not halfway. Your stop above your entry. So TP was hit. This candle supported this thing. So when you see these kinds of long wicks, these kinds of long wicks will be filled right away. So you gotta be cautious when you see them. So you trail your stops up there. So this pullback could get you out of the trade before your TP is hit right there. So trailed your halfway, so you are in profit. So no problem at all. There is no problem. No problemato. Okay, right here what do we have? 1 and 2 and 3 and another 4, 5. This is beautiful. How do you connect this? You connect the bodies. Just like this one, connect the upper bodies. The bodies cannot be left alone. You cannot leave the bodies. You can leave the wicks, but the bodies cannot be left. As you can see, this is a nice consolidation. Broke out there. Measure your TP. You measure your TP down here. Your TP hit by the second candle, the second day's trading right there. Traded down, finally came back, so hit your stops because you trailed it too close. So that could have been another trade. When you trail your stops too close, you will be missing out big moves. but you are protecting yourself from damage, right? Because it could end up being fake. So you can see here it hit your TP2, right? If you hadn't trailed your stops and if your stop was right exactly at your entries, then this could have played out to your TP2. What do we see here? Another consolidation. 1, 2, 3, 4 in a row. These candles traded in a row. You gotta connect them like this. You enter right there, not up there. You enter right there. You can enter up there even better because this thing is done like this one. This is the one that broke out. Then all we gotta do is enter there, sell. Determine your TP, always measure from the high to the low. Okay, you measure from this high to the low, and I don't know why this thing keeps refreshing. It's so annoying. The hell is wrong with this trading view platform? So as you can see, you measure your TP by measuring the height, right? The height will be measured, and you use your Fibonacci to determine your TP, right? Your take profit. So that is how you profit from these markets. Otherwise, they will eat you alive. They will eat you alive. If you don't have a rule, if you don't have a set of rules that you need to follow, and those rules are profitable, then you gotta follow that thing, because that thing is the one that will save you. As you can see in here, from the daily, we are selecting a specific interest right there. As you can see it, we got 1, we got 2. We do not enter everywhere. Because those everywhere are disastrous. They lose you money a lot. So all you gotta do is wait for a specific thing to happen. As you can see, nice trade, nice trade, nice trade, nice trade, nice trade, right there, and there. Our every trade that we select is a winner because we are waiting for a specific thing to happen. Okay, a specific thing happened. So let me delay this thing. So you measure your TP, like I said before. Down here, you put it down here. So this third candle could get you out of the trade. Your 30% would run until the market is tired. As you can see, before hit, then the market pulled back. You will get out here because you trailed your stop. That's it. That was an amazing trade. What about here? Another great, amazing consolidation. 1, 2, and 3. We don't care about the wicks, we care about the bodies. As you can see, another consolidation. You enter by TP hit, but TP2 was not hit, so you trailed your stops. You don't care. But here, no consolidation. It broke to the upside. Okay. I considered this a consolidation because this weak high is never broken. It is still inside the box. It is still inside the range. So it's considered as a trend. As you can see, this is inside a range. This can be regarded as a great opportunity. But before that, there is nothing. This broke its upside. So all you gotta do is connect this thing like this one. Wait for the breakout. Breakout happened. TP2 hit. I think it was TP2. Yes, TP2 right here. TP2 hit. That's beautiful trade right here. That could have been a beautiful trade. What about here? There was a good consolidation around here. This was a great consolidation, but what happened was this is the second model, break and retest. Okay, This is the second model. So we measure just like this one. Your stop loss is down here. So you enter a buy right there. You trailed your stop. So if you, this is a daily candle. So this is not small. This is big. When you get into the 5-minute or 15-minute, you will see that it is huge. So, but the market ended up being retracing, right? So, unless this lower band or this weakest low, the first candle's low is broken, we are still bullish because it is a break and retest, right? This needs to be broken on the downside for us to assume that this is a double fake out. For us to assume this as a single fake out, third model to be in play, the lower band should be broken. But in this case, it never was broken because we want this low to be engulfed by a big candle to the downside. As you can see, another consolidation. Y is still in a range. We are still in a range. Bank connects body, not as a weak. We enter a sell, boom. Another great trade. No trade here, no, nothing here. We have nothing here. This is a doge. Up there, nothing. This is trending up, so there is no trade at all. There is only 2 candles, no trade. This is trending up, so there is no trade. This is trending up, no trade. We jump. This is beautiful. We want these kinds of things, right? Connect this one. This, right? Connect the lows, the wicks. Okay, what you gotta do is you will enter a buy. The first thing the market did is it bought. It entered a buy. We are 70% hit. Beautifully executed. We let the other 30% run, as you can see. 30% run, boom, right there. And then the market ended up being the third model, right? Market broke the downside, you enter a sell again. Right there. By this big candle, you are out. You'll be out. Then you let the other 30% run. As you can see, TP2 is hit but never TP3, so that happens. So you trail your stop, so you don't care. What do we have here? We have a beautiful consolidation around it. So we gotta do is connect this thing, connect the bases, the lows, equal lows, connect the highs, equal highs right there, up there. That is how you do it. Wait for the breakout. It broke right here, so you enter a buy. Your TP is at the next candle right there. The next candle pierced it, so and your TP2 is hit, I think. Your TP is nailed, or TP3 actually. It went to TP3 too, and as you can see, TP3 were executed great, amazingly. Next, we had another trade right there. This is another amazing. Okay, I couldn't keep up with this thing. This trading view is making me. This is so embarrassing. What the hell is going on with this thing? This thing is crazy, bro. It keeps refreshing and refreshing and refreshing, and my goodness. So as you can see, this is very simple. It's very simple, and that 30% will maximize your profit a lot. That 30% that you leave is the most important one, but The 70% protects your entry and your total balance, your equity uh, from reaching the red, from losing you money, right? From losing you money. But just 30% adds more money into life. It is just like a compounding effect, right? It's like a compounding effect. You enter exactly at the best place and you let the market do its thing. You protect yourself by trailing your stops at least to halfway, and then the market will give you more and more and more, and you don't have to do anything. You don't do anything, just enter and let go. You enter and you let go. So you have to regularly check your trade, because your trade determines, your focus is required here, because you gotta trade your stops. You gotta get out at 70%. I think there is an automatic feature on MetaTrader that lets you trade by automatically. It trades automatically. So all you have to do is determine the points that you want the computer to follow the market. Okay. There is 100 points, there is 400 points, there is 500 points, there is 800 points, I think 1,000 points. So as you can see, points means it's just the tens, 1/10 of the pip, right? 1/10 of a pip. So if you see 100 points, that means it is 10 pips. If you see 1,000 points, that is just 100 pips. Right? You divide it by 10, and that will give you the pips. So pips is 10 times the point, 10 times any point. As you can see, this is still, we haven't reached this halfway. So this is gonna be a long video. So strap your seats. We are selective in our trades, so we do not enter everywhere. There is no way we are entering everywhere. So you can see great trade. That is called momentum rolling. Before I discovered this strategy, I was into let's maximize this thing. I was into candlestick patterns, indicators, alligators, MACD, stochastic RSI, and everything. Everything there is to know. My goodness. Who would have thought this thing could move like this? Could reach this? Could move this? What the hell is wrong with this? Oh my goodness. I am losing patience here. I gotta save it. Yeah, that's I think that is the one that is playing with me. I gotta save this thing after I do something like this. Alright, so to save, just hit this one. It is saved now. All we gotta do is hit this one, and we are live again. So I hope we will not return to that position again. As you can see, nice trade this could have been, but the TP was too close. As you can see here, right here, the TP is, my goodness, that is so. There, TP down here, exactly as this candle slow. Your stop loss will be right up there. Once the market retraces, it will be down here. Once the market comes down, it will be down. Once the market comes down, it will be down a little bit. You don't get greedy. If you get greedy, you will make a mistake. Don't get greedy and trail it too close. Following is us. Do not do that. If you do that, you will miss out on a big move. you'll miss out on a big one. It has its own downside, but as you can see, if you trail this thing too close, you would miss this whole move. As you can see, this is huge. No one would, not even the Fibonacci could determine this move right here. The Fibonacci could tell you to get out at this candle's low right here, right? But when you measure from down here, the classic low high thing, right? So as you can see, TP3 right there exactly hit boom. Okay, it broke, it went up, that is where you enter right there. So this is another kind of specific entry, sniper entry right there. We entered exactly as there, not there, not there, not as this candle. We entered exactly when the market starts to move. Okay, that is the beauty. It's so beautiful. The black box is, it's just beautiful. Okay, we enter after every hard work is done. Everything is done and it is ready to be delivered to the other side. So that's where we will be the part of. We do not pay any swaps, we don't pay any commission, we do not delay anything. We are entering at the specific position, a specific time, right? And that makes it beautiful. So you can see when you measure the TP series down here, right there. Okay, but in this case, in our box model, it is down here. So trailing your stop and letting the other run. Trail and don't be greedy. Trail your stops long way. Okay, away from the market, because if it is too close, then so you can see this could get you out and move further down. What do we have here? We got nothing because it's only two candles. Now only two candles. It broke. We would assume this thing as consolidation if it was up there and never, if it had never went down, right? But it went down, that is trending. As you can see, it is trending still. One, we got 1, 2, and 3. Now it is trending. It broke it. Now what do we have? We have moved up, right? And another thing, we have moved up. This is not a consolidation. So after this time, all you gotta do is, as you can see, trading view is also against me. Let us just do this because I already selected a rectangle. So let's put it here and get back to our previous thing. I already saved this thing and it just scrolls down and it scrolls back forward. I don't know why. It's just so embarrassing. So as you can see, this is, as you can see on the bigger picture, this thing is still consolidating. So what we gotta do is we gotta combine this thing. So you can see down here, this is how you do it. It is big. This consolidation so big that you have to cover everything because it made equal highs. You gotta combine all equal highs. So where do you enter? Right there. Right there. As that weakest thing, right? You enter right there. And what happened? It came down. Your stop loss is up there. Your TP is never hit because your TP is longer. It will be longer because the consolidation is so huge that it is the entire trading has to it hit the entire trading existing. Okay, as you can see, what you gotta do is your stop loss is right there, up there, so you would get out. So what happened next? It went up. So how do you assume this? This is a break and retest. That is why I put the models in front of you. We got the 4 models, so you'll navigate the markets without anything, without any confusion, right? When the market comes back after hitting your TP or after the market breaking out, when it comes back, there is 2 things that would happen. One, it could be the third model, and second, it could be what? Break and retest. It would be the second model, right? If the market comes back again. So what you gotta do is filter this out. How do you filter it? The second model will be what? If it is break and retest, what would the market do? The market would go up again. Why? Because there is unfinished business up there. We broke the upside, now the structure is broken to the upside. Now we are bullish, right? So we should be moving up, not down. If it were a single fake out of the third models, then the market would come down and crashing down. And if it breaks the lower band, then we are selling because this is a fake out. This could be a fake out, right? That is how you will be different than the other 90% traders. The other 90% traders. You are specific in your entry. You are specific in your rules. There are specific rules. There are specific risk management. What do you want more than this? This is a military grade strategy. This is huge. This is huge strategy. This is amazing. I don't know what else do you expect more than this? It's so insane, right? So as you can see, so always after entering and after being in profit, your stop loss it came down and it broke again. You enter a buy. And what happened? It went up, right? It went up. It came down and supported again. Still supporting it, and it went up, right? TP2 is hit. I think it is not TP2. It is TP1. It could be TP1. Yes, it is TP1. TP2 is not hit. TP2 is never hit. Right? Okay. So as you can see, what do you learn here? Trailing stop loss to close before the market moves up more is very disastrous. As you can see, if you are trail your stops after the market moved up, you would get out soon with a little profit. And it came down, it's supported, and you will enter again, right? Why? You saw a rejection, right? You saw a rejection in the bullish candle. I'm sorry, but it keeps going. I'm sorry, I don't know what to do with this thing. It is so annoying. It is so annoying. It's killing me time, it's killing your time too. I don't know what the hell is going on with this thing. So as you can see, your stop loss should be down here before the market moves further. If it moves further, then it would be halfway, right? Right? Then it came down and then went up. So you don't worry about the 30%. All you gotta worry is about the 70%. That's the most important one. This thing has to be hit. If this TP is not hit and the market continues to move up, it will hit it. It will never come down. If it comes down, it is a retest, just like this one. It is a retest, boom, retest, boom, retest, boom. That's how the market goes. So trailing your stop loss too close is not uh, recommended. That is being greedy. Don't be greedy. Don't be greedy. Just a small profit is enough, and maximizing it to a long run is great. Okay. Do not enter 100 lots in this single trade and expect to win. Enter a small lot, another lot, another lot, and another small lot, and those will combine and give you something. As you can see, another consolidation up there. You combine this one, right? This is a daily candle, so this is not 1 minute. Don't think that this is small. I don't even care because this is a 1 minute. No, it is not a 1 minute candle. This is a daily candle. Huge. As you can see, TP hit, TP2 hit. You measure it with your Fibonacci. Even TP3 was hit right here. Okay, that was amazing. Not ready, only 2 candles. We don't want that. What about here? We got 1, we got 2, we got 3, right? That is a nice consolidation right here. So how do you measure this? You measure this like this. There is no equal candle up down here, right? These 3 candles, they are rugged. All you gotta do is connect the ups, the bodies. So it broke out, you enter a sell, you measure the TP to buy this candle, you let the other 30% run, boom, it came down. You trailed your stop halfway, so it went up and got you out of the trade. The other not trade here, not trade here because it broke the downside. It is not in the range. As you can see, these kinds of abnormal movements could be, these are not good. Okay, these kinds of movements, they are not good. So you can see we got two candles here. It went up and it came down, so this is valid. This can be regarded as third model. So you enter right there. Sell. Sold it, TP hit. Okay. And retested and it came down. To where? To TP3, right? Came down to TP3, I think. Right there. Again, the connection is really messing me up, so man, I don't know how much longer did we spend. I think it is 15 minutes. Oh my goodness, that is huge, that is huge, that is huge. So I think if it reaches 1 hour, we'll be wrapping up and I will continue the next part next time, because as you can see the connection is, I think it is a connection, not the platform. The trading view is not the problem here. It is a freaking, my connection is very bad. So today, as you can see, that could be a nice trade, that could have been a nice trade right there, boom, and TP3 hit right there, down. Another consolidation up there. This is nice consolidation. So you can see broke the downside, TP hit, TP3 hit, TP4 hit, and we let the other run, 30% run, and look what it did. Okay, look at what it did. What do we have here? Another consolidation. It is in a range, right? It is in a range still. Connect this body, connect the loss. You enter a buy rise. In this case, the TP was not hit. You can measure. Yes, as you can see, TP was not hit. It was too close, but it was not hit. So your stop loss is halfway, so you don't care. You don't care. I think there is no consolidation. It broke the upside. It broke it. It was trending, so I do not take this trade at all. Yes, this is a nice consolidation right here. Connected like this. Then what happened? Ended up being as you can see, we consolidated a lot. You connect the highs of the wicks, the lows of the wicks, right? You can see it broke the upside, you are in profit. Then TP was not hit, your stop loss would be hit around here. Your stop loss would be around here, right? So it came down, you could have sold another setup here, and in addition, this is another setup, could have sold down here, and in addition you have this the previous setup, so you could have added another position down, right, when it breaks down. So as you can see, TP was not hit actually, but as you can see, oh, actually it is hit by this second candle. It broke and it came down again. It retested. That's the problem. If your stop loss was around your entry point, so that is better. Okay, a little bit above your entry point, that is better. Okay, so it went up, it came down, and it came down again further. So, or you could trail your stops down, down, and that will be great. As you can see, another consolidation. So every consolidation that I am showing you is being great. it is giving us profits. It's giving us profit, even if it is small, it's giving us profit. As you can see another profit. I think TP was not hit around here. TP hit, yeah, TP hit beautifully. Nailed it, this thing nailed it, 70% out. Came down, you could have sold this thing. I'm sorry, just bring this thing. Still as this, bring this thing down. That is gone. And another trade is 70% hit. Right? And we would get out of there. If that was not enough, then this thing could hit it, right? Then it retraced back. Your stop loss would protect it. Then consolidated as a time, this are lat break also, you connect them like this. So what happened? It broke the upside, it trailed your stop above your entry, you don't care. It came up but never hit your TP, so it came down. You enter a sale because this is a short model. The third model, boom, as there. The second candle filled it, right? The second candle filled this thing, and you delete the other 30%. I'll show you the live trade when I take a trade, right? So even yesterday I missed the trade on Bitcoin. There was a nice trade. Bitcoin was moving up, it was consolidating, and I could have bought that thing and profited a lot, but I missed that thing. When I looked at it, it was over. So you can see TP2 hit, not TP3. So TP3 was not hit. TP2 right there, so okay. This is great, no consolidation, nothing here. We have nothing. We do have something here. Connect this thing again. Just like this one. You sell this thing right there. Yeah, right there. You sell this thing and it came up and your TP will be hit right there. This ended up being third fake out. I mean the third model. So all you gotta do is when it comes up, you buy. You buy. When it comes up, you buy right there. You determine your TP. 70% will be out right exactly as there. And TP3 is right there. Okay. You delete it. Run until it retraces back. Your stop would be there when it candle forms up. Your stop would be there when it candle forms up. Your stop loss will be right there. Do not touch it. And then up, you make another move. Up, you make another move. And that's how you trail. Or put on an automatic stop loss trailer on MetaTrader. Another great trade right here. These all are moving on sideways. So wicks, not the bodies. So if it was the bodies, then I would not consider this thing as a great trade, right? Move it down a little so as to cover everything, right? So you can see broke the downside, TP hit nicely, trailed stop loss halfway, then you would be out. Then it broke the upside, so enter a buy right there. Right there. It came supported and it went up. I think TP was hit 70%. Right there. So a little poke. Didn't hit it, a little bit. Right. So another big support right there and we went up all the way up. Then after that the market supported this thing and went up. Right. So this was a nice third model right there. If you had the gut to wait, then and but the swaps and everything will eat you, so don't do that. just trade intraday and get out. There's another consolidation, 1, 2, and 3. As 1, 2, and 3. Connect, boom, it went up. No, sorry, this one, the fourth one. We want the fourth one, not the third. Then TP hit, TP2 hit, like that. And again consolidated. So this is another consolidation as well. And we are considering the third model right here, single fake out. And see, it went up. The next day it went up too, and it collapsed immediately. So you enter a sell, that is, you trailed your stop loss, that is a great trade. That is not profitable a lot, but it was great. It's better than losing, right? So every trade I show you is profitable, right? Because we have set of rules to follow. We don't go with our emotions. As you can see here, another sell, boom, third model, boom, and then TP hit your trade, stop halfway through there. You don't care if it retraces. It came back, retested, then, but I don't consider this as an entry because I would like to enter at exactly the first opportunity I get, not the second or the third opportunity. Those are a little bit tricky. As you can see, after the third model has been played out, the market went up, broke to the upside end. Actually, if you connect that thing with the high, this high, then this low is the low, relatively equal. They are relatively equal. So what you get is you will get a sell here and came down and another sell, but then it went up, right? It went up. So after that it rallied up huge. No trade at all. This is trending, no trade at all, and this trending, no trade. We got something in here because it is inside this and this range, still not breaking the highest or the lows. So you buy there, boom, you moved up, TP3 hit, beautiful trade, and trading halfway is great because halfway, when the market moves up halfway, so then it came down, right? So don't be greedy on that 30%. This is only 30%, right? And you are in profit, right? So your stop loss should be wide, so for the market, to accommodate the market. Do not put it too close. Let the market do its thing, right? We got another 3 candles in a row here. Beautiful. Finished. Great trade right here. Nothing here. This is huge swing, and they are not even equal, right? There is nothing. This thing is great, but this is still too huge. This huge. They should be equal, right? They should be equal. This high should be up there, but it was not the case. So you let that thing. You don't trade that thing. We do have something here. This is great. This is better than that one. You connect the highs. We want 3 candles. After 3 candles, the fourth candle broke. You sell. TP3 hit right down. You got another trade. we bought, boom, TP3 hit, and right here this is a huge swing, huge swing. So this is the range down here to there, so you can connect this thing with the range. You are entering after the third candle is formed, right? Not because you third candle is that one, after you enter at the fourth, right? So the fifth broke, so you enter a sell right there. It went down, your stop loss at your entry level, it went up, and again it went down. That's where you enter, right? That's break and retest. That's break and retest. Beautiful trade. That could have been a beautiful trade. Amazing. Another trade down here. Connect the IC, connect the loss. Just like this one. We broke the upside. Right. Then you TP hit 70% out. Another trade here. That's how you mark this thing. This thing like this one. Then down, TP hit 70% out. Trail your stops to your entry. You don't care if it comes down. What about here? We have nothing here. We can assume there is nothing here. But it was this thing went up, so we can measure this thing. Just like this. We gotta do is enter exactly as the third candle, right? Third candle broke the consolidation, went down, then not TP was not hit, so your trailed stop loss would protect you. And retested another sale right here, boom, we get another entry. Nothing here. Consolidation, we want a sideways movement. Right, this thing went down, so we don't see this thing as a consolidation. But if you want, you can connect this like this one, right? So what did the market do? The fourth candle broke to the downside. So this is TP at 70% right. You went up, right? You say you buy, right? You buy and say your stop loss is at above your entry, so you let it run. But it came down, so it hit your stops. You don't care. If you had sold another here, it would have been great trade. Your stop above your entry, right? So another trade here. This is not a great consolidation. That's why we are seeing back and forth here. We want clean consolidation market. So you can see when we mark this thing, we mark the whole thing to the downside, right? This thing has to be, this thing should be also included right down. That's why, right? This is how we do it. This is still in consolidation, then this is the real one. It broke, then it came down again, making doji evening star. This evening star of course shows bearish. We got another setup down here. So all I am saying is do not select these kinds of swings. So if it is swinging like this, do not do it. We want these kinds of compressions, compressed, right? Compressed and moving sideways, not swings. We do not trending. We don't want trending ones. As you can see, this is compression. This is the one that we need. As you can see, this is a real breakout, right? Boom, TP hit 70%, boom, and you let the other run. Your trail, your stop will be getting you out right here. So no worries. Oh, what do we have here? another trade. These huge swings can be left alone because they are mostly not touched these kinds of swings. So as you can see, lows, you connect the lows just like this one, right? One, we got one, we got two, we got three, four candles, right? Five, and this thing just keeps consolidating. After that, it broke, and that is where we enter. We enter a sell, and your TP is hit if you measure this thing. TP was not hit actually. It was the second candle that hit it, so your trail stop loss would be the one that would protect your trade right here. There is nothing you can do here as it retested. Your stop loss would be normally up there, but when the market advances, it would come down here, right? So this thing could get you out of the trade. Okay. Next, we have some great here. This consolidation, right? Broke, retest, boom, went down, break and retest. That's nice one. We got another one here, still in a range. Do not select these kinds of swings actually, but you increase the body and it went up and went up and went down again, right? Found the support and came up. So it would have been great. This is not great. This is another great trade right there. This is what we need, these kinds of things, right? No wicks, nothing. This is a full blown candle, right? This is a great candle stacked together in a row. It went up, TP3 hit, I think, yeah, TP3 and TP4 hit. There is not red here, there is something here, we have something. You connect it like this, you enter a sell right there. Okay, TP hit, so 70% out. Your trail stop would be protecting the pullbacks. We have another consolidation down here. In this case, what happened? Was as you can see, it broke to the downside, right? Consolidating sideways, it broke the downside, your stop loss would come down and it would be protecting you. It broke the upside again, right? In this case, so not much, but as you can see, this is, I think, a 10 pip movement. This could be 10 or something. What the hell? That is 80 pips. Huge. Jesus Christ. 81 points, right? 81 points. That's huge. If you get on the lower time frames, you'd see that this is huge, right? So your stop would be on at your entry level, right? So after that, after going back and forth, there is an advanced theory that in the black box that you need to account another 5%, okay, to cover the fake outs, right? As you can see, 5% means just like this one. You give another 5% space for the fake out to play out, right? So you can see This is not a fake out because we gave 5% space to the upside and the downside, and it is in the nice range right now. When it breaks, that would be the real one because we gave it a 5%. That's an advanced thing. We don't want it here, okay? We just follow the basic one, okay? You don't want that. And it happens rarely. It is 1% or 2%, and most of them will be, the fake out will be prevented by using stop loss. The stop loss, okay? So stop loss will be at your entry level, so don't have to worry. And another trade right there, right? So this is a thing that broke it. It broke down to zero. It hit our TP. That would have been great. No trade, no trade. Another big trade right here. 3 consecutive candles in a row. Boom. It went down straight. This is not in a row because it broke even with a candle. So after this, we assume that this is a consolidation after the 5th candle because this thing is trading around here. So you connect it from the low to the high, just like this one. This is a consolidation, as you can see. So this is our entry right there. Boom. It went up. It went down first, I think, and then moved up, then closed down up there. So it went up, TP hit, so we don't care if it comes down. Our stop loss is here to protect it. No trade around here. You could place your box, but this is not very compressed. This is just right. Just if you want to come do it and then nice. This is the kinds of things. These are clean. This is what we want, right? These are clean. So you can see TP hit. 70% would be out. Other three right there. TP hit right there. And your stops would be hit too because it came up to your entry level. Another back and forth trading. So you connect it just like this one. So once it breaks out, you sell. It broke out, you sell down here, and it came down there. TP hit, right? It came up, you buy, and that is great too. And as you can see it here. So it went up, right? It went up. So this is what I wanted to show you. This is a daily time frame of the Bitcoin USDT chart. So you can see we are on May 2020 right now. So we will be discussing the next one, the rest on the next video, okay? Because I'm tired and the video is getting longer too. Most of you don't have, human beings don't have that much attention to focus. So I don't want to put any more pressure on you. Let us measure this thing. As you can see, nice consolidation right there. So we went up, that's where we buy. It supported, boom. Alright. Unless it advances up, we will not be moving our stops, right? It has to advance up, at least. Up, right? And then we will move halfway. Otherwise, it has to support, it has to do its thing, and we let it happen. Right? We let it happen. This thing another trade. Why? Because this thing, instead of going up, it came down. So this made another third candle, right? This is third candle is the one that we entered. Then it retraced, boom, and then went down straight to our TP. This is another compression right here. We need these kinds of compressions. So the fourth candle we want is the fourth candle, all we want, and fourth candle killed it. It went up. Do we have something? Yes. 1, 2, 3. Again measure. So you can see moved up. TP hit. What do we see here? Another third model. I mean first model, boom. And here we have our other went down, another huge consolidations, and boom, it went up, right? August 2020, at the end it went up, it never returned, never looked back. This thing can be like this one. Connect the loss. What you gotta do is connect the loss just like this one. The equal loss, okay? You bought that thing and then you will sell this thing, okay? And we don't care what the next is. This is a fourth model, double fake out, boom, boom, and boom. As a fourth model, it doesn't happen always, so we don't care. All we want is the first and the second and the third models to play, right? So this is the one, the candle that broke, it broke and went up to our TP. We got another consolidation down here, right? So this is the one that broke the consolidation. You buy, your TP is hit. Another consolidation down here, right? You buy, and it came down, and it came up again and broke down, right? It's very minute, a very minute thing right here when you see it. This is consolidating to deliver upside further. They are consolidating it to deliver to the upside further, right? As you can see, it went up, could have bought that, and consolidated again, and what did it? It went up again, right? So in this case, all you have to do is you have to contain this thing too, because this the new range right here is at the new range, and you connect the loss. So it went up and it came down, so you sell again. Finally it broke the upside. Then another sale, buy, I'm sorry, right there. That could have been another buy, amazing. And we had another buy right there. So you can see it. There we go, right there, boom. And supported and moved. So you let the market do its thing. As you can see, another 3 candles in a row. That is where you enter, boom, your TP is hit beautifully. Nailed it. Right. And that is trending one, so we don't want that. We want this one. You connect this one just like this. It broke the downside, you enter a sale. Right. Broke the downside, you enter a sale. And it came to the upside and you enter a buy. So you can see, and supported and went up, right? We got another here. We have another here. As you can see, this thing, what it did was it broke to the upside. I'm sorry, the downside. This one, the fourth candle. We wanted the fourth candle on the downside, so we sell. TP is it, I think, is 8. Yes, yeah, is 8. Okay, it is this 8. The candle said boom, and then came back. What you're gonna do is you buy. This is regarded as a single fake out. Even if you cover this thing to the downside, it is still broke to the downside. So it's a double fake out. I'm sorry, this thing 1, and we have 2, and then went up. the fourth model of the black box, TBB or TBB strategy, right? There is no consultation around, that's why I'm passing it. We have something here, right? 1, 2, and 3, right? Sell, boom, TP hit, went up, right? It never broke this thing, so no trade at all. We do not trade. If it broke the upside, we would be buying. Right? We would be buying. We had another trade, right? You connect the loss, connect the high, sell, boom. This came down, so this is another trade. From the up, it came down, nice trade, then you enter a buy. After selling, you enter a buy, right? That could have been a great trade. Do you see anything here around? No, around here, nothing. It's all trending, right? I have seen something around here. You connect this thing and you sell, right? You sell it. This is trending 2 candles. We don't need 2. We don't need 2 of them. But if you see it on the higher time frames like the weekly, you could see that this thing is consolidated and it went up. So it broke by that candle and you will buy, then buy. TP is hit beautifully. This can be seen as consolidation by the higher time frames. As you can see, broke the upside, went up. This thing is not a consolidation. We do have a consolidation here. You buy this thing, TP hit, right? And it came down. Your stop loss is down. You don't even care. All you care is if it broke this lower band, right? This lower band. That is where you get worried, but not before that. We have another thing, right? As you can see, these consolidations form at the reversals, the market reversals, where the market starts to reverse. You can see nice trade. This could have been nice trade, amazing trade. Nothing here. We have something around here. As I have told you, it is found on reversals, market reversals. Boom. It went up another there. Boom, sell. You got another sell. So this is how you connect it, okay? Boom. The downside, right? So here it is a weak, and this thing you can connect it, but this is recurrence formation as a TP hit, it went up and it came down to your stop loss. Another consolidation up here. So it broke downside, it retested and it came, it retested and it came and finally bursted up, right? And then fell down. We do have consolidation here. It's a nice one. Nice consolidation, boom. Another consolidation here. Because it is a wick that is forming this thing, not the bodies. So we do have a buy here. Yeah, first it was a sale. We could have sold this thing and then came up, then we would have bought it. Came up again, then we would have bought another one, support, right? It went up again and buy this thing. It's still a support. Still a support. Not right there. Up there is something that is trending. So I'm connect this one and these things. Four of them sell. Boom. What do we have here? We have another trade right there. Right. This thing broke the downside, right? Sell. Stop loss hit. came up, right? And again buy. 3 days later your TP hit upside and it came down, right? And after that this thing act as a resistance. Okay, when the market comes it resisted this thing, right? So in other cases you would buy this thing. This is a daily candle, it's not 1 minute, so it's a lot of money around here. TP hit, boom, the market finally came down, you sell again. That is another great trade. What do you see something here? Of course, the consolidation and never ends. It's everywhere. That's why I'm telling you these things are great. Okay, as you can see, this thing being uh, it is a fake out. It's a third model right here in play. Fake out, single fake out, boom. And wait up, we could have bought that thing and then trailed our stops and the market came back, right? Another sideways movement right here, another buy, TP hit, the market came down. What you gotta do is now sell. You sell that thing. This is very huge swing, so I don't actually involve yourself with these things. This is very huge. So all you gotta do is wait for the break and the break up. Right. Now trade at all, no, we got something here. So you can see. It went up, TP hit, beautifully executed, came down, and again we enter a buy, boom. Again TP hit, right? So that's beautiful. And the nice clean, another nice clean trade up there. So as you can see, at the fourth play, you could have bought that, came down, and another buy, and then came down and then sell. Another sell, right? This thing is done like this one. The connect is like this one. It came down, then you sell, right? Then it came up, and then you buy. Third model in play right here. The third model in play. There is nothing. There is a huge swing, so we don't want to involve ourselves. We want to get involved. Here there is consolidation around it. This is a nice sell, boom. Then another thing here. As you can see, then another consolidation. We could have bought this thing, and it's consolidated again. Another buy right there and supported stop loss down here and TP hit. TP hit right there. Consolidation there. It ended up in down to the down. It went down. That could have been another great buy. I mean sell, I'm sorry. There is no consolidation around there, but above there. We came to 2023. That is beautiful. As you can see, this could have been a nice buy right there. Boom. It went up. And TP is hit. Another consolidation right there. Boom. TP hit. It came down. Support. Your 30% still in play. It came up again. Right? If you trail your stop, you are out soon. It came down. Boom. It went up. Right? So this was huge consolidation, right? And another thing right here. Bought this time. We could have bought this thing. So TP hit. Boom. And this thing came up and went up, right? Another third, three candles up there. We came back to the previous place right here. Went down, hit TP and supported, and we could sell another. I mean, we could sell another thing, another position. We sell This thing Fibonacci projected and TP would be around it, TP4. Another consolidation sale, another consolidation up here, sell, boom. Then another one here, sell right there. I mean buy. That is buy. Do we have something here? Yes, this one. These all candles are something, right? You measure this thing like this one. So when you see these kinds of things, it's a huge consolidation. So buy there. So you can, if you are more conservative, you can include the 5% rule. The 5% will cover most of the damage. Okay, most of the damage will be covered by the 5%, and you would enter right up there. So that's the real one, and that's amazing. That's great. Another trader because that candle came down. Now I don't have to worry because I have reached the end. I don't care if yes, it is right there, right what we wanted. What the point where we want this thing to be. So I think it is around 2023. We have reached the 2023, as you can see. That is the end, right? So let us finish this thing and we would be wrapping up. As you can see, that one nice consolidation right there. So sell, sold, and then this thing, nice consolidation. What the hell is going on? Sorry guys, the connection is very bad. It's very bad. As you can see here, it came by, supported by right there, so it went up to our TP. Another sell because we are assuming that this thing just like this one, sell, boom, came up, and we are out because of the trailed stop loss, right? Another sell here, beautiful. It came up, another buy because we are consolidating the third model. In addition to that, another position added. You can add another position. We have another consolidation, right? So broke the upside. You can buy this thing. Right there is no consolidation. Everything is messy. So when you see these kinds of things, all you have to do is go to the higher time frames, like the weekly. When you go to the weekly, this thing would be only a couple of candles, and you would not be messed up by these swings. Okay, these swings. But if you insist on trading on the daily, then you would have to consider adding the fibs, I mean the 5% rule to the black box model. Consider adding the 5% rule. We broke right there, so that's where you sell, and you have to wait for more days for your thing to play out, right? Because you are considering this whole I mean this whole consolidation, not specific one. So to shorten the day, you have to select a specific consolidation, not the whole consolidation, right? So specific consolidations can be like this one. This is a nice one. We could have sold this thing right there. Sell this first. We sold it, then we bought it, and it went up right, right? Another consolidation, we bought it. I mean, we sold it first, and then we bought it again using the double fake out model, right? Using the single fake out model. I'm sorry. And then this thing, this is a real breakout. This is a real breakout right there. We have 1, 2, and 3 candles. Around here it is swinging back and forth, so all you gotta do is just the higher ends and only the bodies. You connect only the bodies, and as you can see, the wicks can be used as a trading opportunity. This thing another consolidation. I was trading this thing back in 2023 in August, and I entered the trade right here, but using the consolidation method, but I got out early and I missed this whole move because I thought that it could support something and move up again, but it was collapsing. I missed a lot of money, so I regret that. Okay, so trading your stops away from the market's position is great. Okay, it is great. 70%. That's why we are getting out. We are removing the 70% out of the market. So our emotions will be reduced and we will make more money. As you can see, there is no trade here. It's a huge swing, then we don't want trading markets. Nice trade right here. From the bottom to the up. Okay, it went from bottom to the up. So where do we enter? Right here. We enter right here. Right here, there is no trade. Right here, we got some trade. Still trending, but we have to consider something like this one. As you can see, this we want the fourth candle, right? So it bought, we could buy that thing, and it came down, and we would sell it because of the third model, the single fake out. Right there, another selection. Recently, it was a nice buy right there. I have bought this thing and made money from this thing, right? And right there too. How do you mark this thing? You have to include the body, okay, the body too. You cannot leave the body. So as you can see, this is where you will buy. Then after that, Bitcoin shoot up, and there we go. Some trades. We had some trades on the daily time frame. So you can see, nice buy right there, boom. And still your stop loss is not hit it. Support, and moved up further. No trade in here, no trade in here, no trade in here. It is all trending, right? We got something here. So you connect this thing just like this. You sell TP hit, and it came back and hit your stop loss. Another thing, I am considering every situation, right? So as you can see, I'm considering every, it broke, then TP is hit. So beautiful, nailed it. What about this one? How do you connect it? You connect this like this one. You don't connect the wicks, right? So it broke, you sell, boom, your TP is hit. What do you see here? We had some consolidation, but it was trending so a little bit. Right there, we do have some consolidation. It was most recently, and it broke out of that one and it went down, right? This is not a consolidation actually. And this was another one. So you can see Bitcoin on the daily time frame has given us a lot of setups. As you can see, this was a nice buy right there. So let us zoom out. This was the trade that we took, and every one of them was a great one. Only 10% of them, 5% or 10% were not successful, and that is why I'm telling you it is 90% winner. It has 90% winner rate. As you can see, this thing, all the black boxes that you see are trade opportunities right there. Okay, trade opportunities. So this is a daily setup for a Bitcoin, right? So it's everywhere. I have showed you the monthly, I have showed you the weekly, and now we are on the daily, and next we'll see it on the 4-hour and the 2-hour time frames, right? The setups. How do you trade this thing? So you have a better understanding of your stop loss placement and your take profits and your entries. How do you enter next? How do you enter next? And the next opportunities, right? So that's what I'm talking about. So next I will see on the 4-hour time frame, on the lower time frames, right? Then I will let you to discover it by yourself by going to the charts by yourself on the lower time frames, like the 1 hour and 15 minutes. Do not trade it below the 15 minutes. I'm begging you, don't do that. There will be a lot of fake outs. There will be a lot of swaps and fees and commissions you'll have to pay if you enter there and there and there and there. That's not good, and you will not get any pip, any a lot of people. So that is not a good idea to do. So all you gotta do is you gotta trade it on the 2 hour or more. Okay, don't go below the 15 minutes. Okay, 15 minutes, 1 hour, 2 hour, 4 hour daily. Alright, if you are a swing trader, monthly and the weekly, right? This is how you trade this thing. Okay, this is amazing. So guys, we are the swings. We are uh, catching. We are hunting the source of this thing. Okay, where did it start? We are hunting the source. Okay, where did it start? That is where we are. That's why we are interested in here. That's why we. That is where we are interested. Okay, I'll see you in the next one. So, thank you for watching. I'll see you in the next one. Right. Bye bye.